All right, so today on the show, we are going to focus on equity-linked saving schemes, and by that I mean the ELSS fund, which are very popularly known for your tax-saving purpose. But then, is that the only reason why you should be having ELSS fund in your portfolio? What are the top-performing ELSS fund, and exactly how should you be investing, considering there is a lock-in in these ELSS fund? What are the strategies that fund managers are adopting for the performance in the ELSS fund? Let's get you all the analysis today. I have with me CEO of InCred Money, Vijay Kuppa. Vijay, good evening and welcome to the Money Show. And today on the show, you're going to help our investors understand the right way of putting money in an ELSS fund, apart from it being a tax-saving instrument. So, Vijay, one very important thing that investors need to understand is, we have a tax-saving mindset. If at all you are someone who's opted for the old tax regime, you definitely want to put money in tax-saving instrument. But then there is a way where you can have these investment instruments combined to your financial goal. And over here, when we talk about ELSS fund, a wonderful way of putting money in equity. Of course, you have NPS also, but the mutual fund route via ELSS. How do you look at this investment instrument, not only just a tax saving, not for tax saving purpose only, but also for your financial goals and overall portfolio lineup? I think you are on mute, Vijay.
Yeah, am I audible?
Yeah. Perfect.
Yeah. So ELS is actually, thank you so much, and good evening to you and everybody. ELS is actually a great way to save tax while gaining exposure to the equity market. There are many other options through which you can actually save tax. Most of them are debt options like Provident Fund or Sukanya Samriddhi Scheme and so on. But ELSS is one such avenue, along with NPS, of course, where you can get access to equity markets, you can get participate in the upside while also saving tax. So I think it is a provision that everybody should participate in. And especially if your asset allocation is more tilted towards debt, like FDs, then this is an excellent way for you to also gain the dual benefit. So we strongly recommend, for you to use this provision. Now, ELSS schemes are nothing but mutual fund schemes, which have an exposure to different types of underlying. So you have large cap ELSS schemes, you have mid cap schemes, you have multi cap schemes. So fundamentally, it is nothing but a mutual fund scheme through which you're getting exposure to an underlying market. There are many such opportunities. Almost every fund house has its own ELSS scheme that they offer to investors. So you can decide what suits your risk appetite and you can invest in one of them.
So, Vijay, just going a little more deeper into this, the kind of fund structure. Now, they can be, ELSS could be a large cap, could be a mid cap also, could be a flexi cap also. But in terms of portfolio allocation, in terms of exposure across market caps, if you talk about the strategy a fund manager can adopt, how different are ELSS schemes from a regular mutual fund?
Okay, so they are actually quite similar that way. So under ELSS category, you've got different types of ELSS schemes. So at one end, you've got, say, a large cap ELSS scheme. For example, Bandhan ELSS is a large cap scheme. Then you've got a multi-cap scheme. Multi-cap scheme is like a DSP ELSS tax saving scheme is a multi-cap scheme. Then you've got some passives. So like a 361 ELSS is a passive fund. Then you've got a Zerodha ELSS scheme, which is a 250. It tracks Nifty 250 scheme. So it's a large and mid cap. So you've got a variety of factors, variety of themes on which your people have made ELSS schemes. So it could fit in, and these schemes mirror the non-ELSS schemes or the normal schemes of that same category. So you could invest in either one, but because this has a tax advantage, then it's better off to invest in these kind of schemes.
All right. So now looking at the different kind of market caps, the type of ELSS funds that we have, how can one make sure that you are not over diversified in a particular category fund? Considering you have an ELSS, but how do you also review the existing exposure in your portfolio across market caps to ensure the kind of ELSS you need to have in your portfolio, which not only gives you tax saving benefit, but also serves the purpose of diversification that might be needed in your portfolio?
Actually, that's a very good point. Often we find that when mutual fund investors, they typically have 10, 20 different schemes. So this is very different from stocks. You could have 20, 25, even 30 stock portfolio and still be diversified. But when you do in 20 schemes, you should remember that each mutual fund scheme also invests further in like 50, 60 different stocks. So ultimately, just because you're adding different mutual fund schemes, you may still end up being not diversified. You're just having concentration risk, and you're not really diversifying by adding so many. So it's very important in general for all investors to see to do like a portfolio analysis and to see what their overall cumulative exposure is across which sector. Because, for example, typically a lot of schemes invest in banking sector. So just because you have diversified, you may still be ending up holding a lot of banking sector anyway. So that is one point. Now coming to ELSS, now once people have done the portfolio analysis and they figure out that, okay, I seem to have a lot of mid and small cap exposure in my regular portfolio, then they should look at diversifying it and taking a large cap ELSS scheme. So this is how they should. Or if they have a lot of large cap, then they can look at having a mid and small cap. Or if they have a lot of private sector companies, then they can look like at a PSU focused ELSS fund, which is there in the market, and they can invest in that. So first they have to do an overall portfolio analysis to see what the concentration is in which sector. For that, they need to have their cash or their statement, and they can easily do that. And then basis that, they can decide which particular ELSS scheme they want to do, because each ELSS scheme has its own characteristic.
All right. Since we have you on the show, I think you've also given our viewers the list of best performing ELSS. I would like to know the name of the funds that you've recommended and the reason why you have picked up these funds. What were your parameters?
Okay, so I have a few of them. So the first one that I have is Quant ELSS scheme. It's called Quant ELSS Tax Saver Scheme. Now, Quant ELSS scheme actually is a very new high performer over the last few years. They've had a change in fund manager and a change in strategy. So what is very unique about this, and this is by far the best performing fund, what is unique about this scheme is that it has a very high turnover ratio. So what this means is that they are very momentum driven and very momentum focused scheme, and they are able to trade very well. So they have an excellent trading team. So they're able to enter and exit their positions well. And due to that, they're able to offer much better returns. So this is a very unique kind of a value proposition that Quant is offering. The second performer that I have is Bank of India ELSS scheme. Now, this is a scheme that has a lot of PSU focus. So it has constituents such as SBI, PFC, Canara Bank, NTPC, etc. And now, because of the recent rally in PSU stocks, we are also finding that this scheme has done very well. It is more of a multi-cap scheme, which means it invests across the capitalization sector. The third scheme that I have with me is DSP ELSS Tax Saver Scheme. Now, this is one of the largest ELSS schemes in the industry, and it is a well-run scheme over a period of time. So it has good vintage. It has seen a lot of economic cycles. This is mainly focused on growth companies, and it is a multi-cap scheme. The next I have with me is Bandhan ELSS scheme. This is a good large cap focused fund. It's run by fund manager Mr. Pinto, and it's heavily aligned towards large cap, resulting in stability and very low volatility of your portfolio. And because of the recent market run-up, it's also done well, and it is a good proxy for a large cap investment. And the final recommendation that I have is a Kotak ELSS Tax Saver Scheme. This is also run by Mr. Harsha Upadhyay, who is a well-known fund manager. It is inclined towards financials, auto, capital goods. So essentially playing on the infrastructure story of the country, and with good focus towards large cap and growth schemes. So these are some of the mutual fund schemes in ELSS category that I think people can invest in.
Sure. Now, since there is a lock-in of 3 years, how would you recommend our viewers to invest in an ELSS fund? Should the SIP route would be good for them, or it should be the lump sum way?
So actually, this has 3 years, but if you compare it to other tax saving, options like PPF or bank fixed deposit, all of them have at least 5 years or more. So from that point of view, ELSS has only 3 years. So it is one advantage compared to the other options in the market. Now coming to how you should invest, I don't think the lock-in makes much of a difference, whether it should be SIP or lump sum. What you need to see is look at how the market is. So I believe that if you have the expertise to be able to time the market, and if you're able to gauge which is a good level to enter, then you can do lump sum. Otherwise, SIP route is a very good way to do it over 12 installments across 12 months. So under ELSS, the rule is that it should be invested in this financial year. So from 1st April to 31st March. So if you can set up a monthly SIP and you can do a 12 installment monthly SIP, I think that is the best way to gain exposure. On top of this, you can also do more than 1.5 lakh. Though your tax saving deduction is only up to 1.5 lakh, you can do investments of greater than that amount, but you won't get a tax deduction. Then you have to just look at it like an equity scheme in which you invest. Then you can use lump sum to go tactically into these schemes. So if your market has fallen a lot, you can then make an investment in lump sum mode. So you can use a mix of both, but as a baseline for this, I would suggest that you should do SIP over the entire 12-month horizon.
Alright, so the entire purpose should be to not to look at ELSS just as a tax saving instrument, but also align it with your financial goals and then make the most of this category. Thank you so much for being on the show and helping our viewers today with their investment in ELSS funds. On that note, let's slip into a quick break, but then post that, let's get your mutual fund portfolio queries answered. And just in case you are watching the show live and you want to send us your questions, you can WhatsApp us your queries on 8657974571. You can also email us your questions on the Money Show at etnow.tv. Time for a quick break, and post that, let's connect to our viewers live.